It's Tuesday, October 28th, 2025. Welcome to your news update on Blip Brief, small but almost everything updated every weekday. So let's jump right in. The Indian market yesterday. It felt like a day shaped by what was happening outside the country, really. Both the Sensex and the Nifty closed up. Each saw a gain of 0.7%.
Yeah, pretty solid start to the week.
But I think if you connect the dots, the story is really about the market breathing a sigh of relief from that global news, but still dealing with some unevenness at home.
That's exactly it. The rally was pretty much fueled by imported optimism, specifically, the easing trade tensions between the U.S. and China. That gave risk assets a bit of a green light globally.
Right. But it wasn't exactly an explosion upwards.
No, definitely not. Investors are still kind of in a wait-and-see mode, holding back a bit ahead of that crucial U.S. Federal Reserve rate decision. That's the domestic break on things, despite the positive global mood.
Okay, and if we drill down into where the money actually went yesterday, seems like a heavy concentration.
Very much so.
Public sector banks and IT were the clear leaders. The Nifty PSU Bank and Nifty Mid-Small IT and Telecom indices, they both surged, what, 2.2%?
That's right, 2.2% each. Sharp gains.
So why these two, public banks and mid-sized tech? Why are they leading the pack so strongly right now?
Well, the PSU bank surge, that often happens when people expect either a cyclical recovery or maybe strong government spending coming through. But more immediately, that IT and telecom jump, that's a direct reaction to the global risk-on feeling.
Makes sense. US and China playing nice means better prospects for IT services globally.
Exactly. So that's why you saw specific stocks doing well, like SBI Life Insurance soaring 3.4%, Party Airtel gained 2.6%, State Bank of India was up 2.1%.
But that unevenness you mentioned earlier, it really shows up when you look at the stocks that dragged. Even with this global optimism, some big names pulled back. Kotak Mahindra Bank was a top loser, down 1.8%, and Infosys dropped 1.4%. If the global mood's so good, why are these heavyweights falling?
I think it's selective profit-taking, maybe some valuation concerns kicking in. These large private banks and IT majors, they've had really good runs. So some investors might be de-risking a bit or maybe rotating out of those more expensive names into sectors that look like they have more cyclical upside, like that mid-cap IT space we just mentioned.
So it signals caution, not necessarily pessimism.
Precisely. It's a sign of a cautious investor.
That caution feels justified when you look at the corporate results coming out for Q2. I mean, the numbers are just wildly different across the board.
Jarringly diverse is a good way to put it.
Let's start with the absolute headline grabber. Indian Oil Corp, IOC, reported a, wow, almost unbelievable 4,128% surge in Q2 profit. How does that even happen?
Yeah, that number needs context immediately. It's possible because it's almost entirely disconnected from, let's say, normal operational performance. The huge jump was driven by strong refining margins, sure, but critically, it was about significant inventory gains.
Inventory gains.
And think of it like this. They bought crude oil earlier at a lower price. By the time they refined it and sold the products, the market price for oil had shot up. So that difference creates this massive paper windfall on the stock they already held.
Got it. So less about brilliant operations day to day and more about benefiting from volatile energy prices, not really repeatable.
Exactly. It definitely skews the picture. And you can contrast that sort of explosive, maybe volatile gain with the steadier growth we saw elsewhere, like P&B Housing Finance. They reported a solid 24% rise in net profit for Q2.
And what drove that?
It was propelled specifically by growth in affordable housing markets. That suggests government focus and maybe subsidies in that segment are actually translating into real lending growth.
Yeah.
More stable.
But then the story flips completely when you look at consumer goods and infrastructure. Bata India, their consolidated net profit crashed 73.2%.
Ouch.
They're blaming lower revenue and, crucially, higher operating expenses. Now, if the finance ministry is upbeat about consumption picking up, how does a major brand like Bata see such a dramatic profit drop?
It really highlights that any consumer recovery isn't hitting everywhere equally. High-level signs like GST might be strong, but discretionary spending, maybe on things like shoes, could still be under pressure. Perhaps input costs are staying stubbornly high, and it wasn't just Bata. Adani Energy Solutions also saw their profit fall by 28%.
So infrastructure costs and selective consumers. A tricky mix.
Definitely. The message is pretty clear there.
Okay, moving from company health to regulatory news, which gave a massive boost to Vodafone Idea, or VI.
Ah, yes, the AGR dues saga.
They got major relief from the Supreme Court on that long-running adjusted gross revenue issue.
This is a really critical development for them. For anyone not following telecom closely, that AGR debt has been, well, an existential threat to Vi for years, a huge liability. So the Supreme Court allowing the center to reconsider V's request about those extra dues, that's a monumental psychological shift.
It means the immediate threat of closure or crippling fines has potentially just backed off.
Potentially, yes. It's a big maybe, but it's a positive maybe.
And the market certainly reacted like it was positive. Vi stock jumped to a 52-week high just on the possibility of relief. Shows how much that debt was weighing things down.
Absolutely. It proves sometimes regulatory news can be far more powerful than earnings reports.
And despite all this unevenness in earnings, the overall confidence seems to be keeping the IPO market buzzing.
It really is.
Yeah.
We've got Lenskart opening its public offer later this week. They're targeting a massive valuation north of 70,000 crore rupees.
Wow. That signals institutional appetite for new companies is still pretty aggressive.
Definitely still strong.
Let's broaden out to the macro picture. The finance ministry is projecting robust growth for this fiscal year, and they're pointing to those recent GST rate cuts as a key stimulant for both rural and urban consumption.
And that's a crucial policy lever they're pulling right. The bet is lower taxes will encourage spending, driving growth. Importantly, they also expect inflation to stay relatively subdued. That's necessary if those spending gains are going to mean anything real.
And connecting this back to trade, we're seeing some interesting strategic shifts happening.
Yeah, driven by geopolitics mostly.
India's crude oil imports from the U.S. surged, hit a record level since 2022. That's not random.
No, it looks like a clear diversification effort.
Yeah.
Moving supply away from Russia, especially with the increasing sanctions pressure on some major Russian oil companies.
It's a tricky balancing act, ensuring energy security while navigating these global political currents.
It is, but it's not all smooth sailing on the trade front. Look at shrimp exports to the U.S. They declined sharply, down 75% in September.
75%. That's a huge drop.
It is. And in a specialized, valuable niche like that, it signals some significant stress somewhere, maybe supply chains, maybe demand patterns in the U.S. Definitely something to watch.
Okay, shifting to policy efficiency. SEBI is proposing a potentially big change for mid-sized companies.
Right, raising the threshold for identifying high-value debt-listed entities.
From 1,000 crore rupees up to 5,000 crore. What does that actually mean for these companies on the ground?
It basically means a massive reduction in their compliance burden. Being tagged as high-value debt-listed comes with a lot of costly admin, extra reporting, public disclosures. By lifting that threshold fourfold, SEBI is essentially taking a heavy regulatory cloak off potentially hundreds of mid-sized firms. Lets them focus more money and time on growing the business instead of paperwork.
Makes sense. Seems like a practical move.
Yeah, aimed at reducing friction for those companies.
Now, let's quickly pivot to global money markets. The rupee had a bit of a rough day yesterday.
It did. Heavy selling pressure.
Dropped 40 paise against the dollar. That's its biggest single-day fall since September. What was behind that?
This looked like it was purely down to aggressive dollar buying. Often happens when foreign institutional investors, FIIs, want to de-risk ahead of big global events, like that Fed meeting we mentioned.
So they're moving into dollars for safety.
Pretty much. And reports suggest the RBI only intervened mildly to stabilize things. They seem to have prioritized letting market forces play out, which led to that significant drop for the day.
Interesting. But despite the rupee's wobble, global stocks were partying. Wall Street hit new records.
Yeah, all confirming that strong optimism about the potential U.S.-China trade truce. That risk-on mood was palpable.
And when risk is on, safe havens are off. Gold prices dropped 1.3%.
Classic profit-taking in gold. Money flowing out of defensive assets and into equities. Investors are now less focused on geopolitical risk and more on hard data upcoming U.S. inflation numbers. Details on that potential trade deal.
Okay, but here's where precious metals get a bit more complex. Silver.
Ah, yes. Different story there.
Prices dropped 18% in the last 2 weeks, which is quite a fall. Yet some analysts are projecting a potential 50% return by next year. Why such a huge difference between the outlook for gold and silver?
It really highlights silver's dual personality. Gold is mostly seen as a monetary asset, a store of value. But silver, it's a crucial industrial metal, too.
Right, used in solar panels, EVs, electronics.
Exactly. So that projected 50% return. It's driven heavily by expected industrial demand, tied to the green energy transition and tech manufacturing. Couple that with ongoing supply constraints. Analysts basically see the recent 18% drop as a temporary dip, not the start of a long-term decline. Makes it look like a potentially compelling bet for those who believe in that industrial demand story.
Fascinating divergence. Okay, let's tie this back to the big geopolitical driver, the U.S.-China situation.
President Trump is predicting a trade deal could be finalized in just days. That expectation is really what's underpinning a lot of the current market stability.
Meanwhile, on the energy front, India is still navigating the sanctions maze. IOC confirmed it will abide by all international sanctions on Russian oil.
Yes, following those U.S. sanctions on major players like Rosneft and Lukoil, it's about maintaining compliance.
Yet at the same time, Russia apparently offered to ramp up LNG supplies to India.
Which shows Russia still sees India as a key strategic energy partner, even amidst the sanctions. It's a complex diplomatic dance, constantly shifting.
And just a quick, sobering note on global events, two major storms we need to track.
Yes, unfortunately. Hurricane Melissa has intensified into a Category 5 storm, the strongest of 2025 so far, and it's heading towards Jamaica.
And closer to home, Cyclone Mantha is expected to become a severe cyclonic storm, with landfall projected near Kakinada in India.
Definitely situations to monitor closely.
Okay, let's end on a different note. A tech breakthrough linking data, intelligence, and space.
Right. We all know the James Webb Space Telescope is incredible technology. But even its amazing images can sometimes have blurring or distortions, maybe from technical glitches or atmospheric effects.
So enter some local ingenuity. Two PhD students in Sydney developed AI software they call Amigo.
And get this, Amigo successfully corrected that image blurring and distortion in Webb's images. It essentially restored its crystal clear vision using advanced AI.
Wow, that's pretty impressive.
It's a powerful example of AI not just creating things, but cleaning up and validating critical data we already have. The market runs on sentiment and data, and now AI is literally fixing the data coming back from space.
Indeed, it kind of makes you wonder, if AI can correct the blurred vision of the cosmos, how long until it's correcting the potentially blurred vision of our company balance sheets, giving us a truly clear view of corporate health, something to think about. And just before you go, a quick note, this deep dive commentary was put together using advanced AI. We always strive for accuracy, but please do cross-verify any crucial information yourself. Your informed decisions are what matter most.